Good morning, good afternoon, good evening, one rental at a time community. This is Matt, the mortgage guy. This is a test of me and Mike's emergency broadcast system. Sent me a message this morning. Let's get something out to talk to people about what the heck is going on with the 10-year treasury and how that's affecting mortgage interest rates. So as most of this community probably knows better than your average Joes and Sallys, is that there's a lot of market volatility and a lot of impact from Silicon Valley Bank, being taken over by regulators, crashing, whatever you want, whatever headline suits you best, right? But in this video, I don't want to talk about that. And there's other people that are more qualified to talk about, why, how, and all that other stuff. I just want to talk about what's going on with mortgage-backed securities, with mortgage rates. That's why you guys call on Matt, the mortgage guy, right? So biggest short-term rally in decades. And, despite the Fed and the Treasury and the FDI backstop for SVB and Signature Bank, which, they came in and just said, we got this, we're taking over. Like the current events, I think for markets imply that economic momentum, inflation and Fed rate trajectory is going to change. And so that is really what drives rates more than anything, is what the markets think the Fed is going to do in the future. They know what they've done, and that's already baked in. And the next couple Fed meetings, when they've got a clear picture of what's going on, that gets baked into mortgage interest rates. When we go from thinking it's almost inevitable that we'll get 50 basis points, a couple 25 basis points, and that Fed funds rate will go from 4.5 to 6 or whatever, was previously projected. If that changes and all of a sudden the future outlook is, well, we might get a quarter in this next Fed meeting. We might get nothing in this next Fed meeting. And there's charts and dot plots and percentages assigned to how likely it is we get 50, 25, and
I found this on the web.
Nothing. Gosh, this friggin' watch just wants to talk to me. And I won't go into that, but what I will show you, and I'll share the screen here, because it looks like the 10-year treasury is starting to tick back up. This is real time, Monday, March 13th. And let's see if we can pull up, because the 10-year got all the way down to 3.42 after it had gone to 4.1. Can you imagine 70 basis points down on the 10-year? And now it's back trading at about 3.52, as you'll see here. Over here for mortgages and what's going on with mortgage rates, this is an important number: 83 basis points betterment to mortgage-backed securities. And 83 basis points, depending on rate sheet, rate stack, right, could be anywhere from a quarter to even a half a point in some cases of true interest rate. You see this big fall off of a cliff. If you're thinking mortgage rates and you want to know a really layman's way to look at it, I just looked at a rate sheet from about a month ago, from Valentines Day, and stuff that we had sent to a client to say, here's what it's going to look like to put 5% down in your $600,000 purchase with this credit score. I pulled the rate sheet today, and it was almost identical. So if you think about it in that way, you could rewind yourself to Valentine's Day and where rates were at on that day. It's not apples to apples here, where I think it shows 6.76, and Valentine's Day shows, what was that, 6.62, but it's relatively close on what lenders' rate sheets going. So good news for mortgage rates. A lot of volatility. Like, we've still got, inflation data and jobs numbers and all this other stuff that kind of took a back seat to this, news about the banking collapses and how the Fed's going to react to that. the most important thing to watch for what's going to go on with mortgage rates is how the Fed reacts, right? It's going to be complicated, like task of reacting to economic data for the foreseeable future for the Fed, and then mortgage rates will follow their lead. So we shall see. Hopefully this was helpful. Huge changes, but even in the last 30 minutes, I think this bottomed out 3.42 and has been in the 3.4s, 3.53. The 10-year Treasury, for whatever reason, starts to creep back up. So by the time all the dust settles today, if we're 50, 60 basis points better, it's not a huge move, right? Like I'm going to get calls like rates are at 4.5 now, right? And I'm going to show people that for their specific scenario, rates moved 0.15% for their specific scenario. So stay tuned. Volatility ahead.